All right, looks like we're a go now. Okay. Perfect. All right, let's jump right in it. We got a lot to go over today, so here we go. Thank you for tuning in to another edition of the Pre-Market Pulsescan. Today is Monday, June the 19th, 2017. The time is about 9:20 a.m. Eastern Standard Time, just prior to the opening bell. All right, we have several charts we're going to look at here, all on the weekly time frame. Hopefully everyone had a great weekend and a happy Father's Day. But now it's time to get back to business. All right, so looking at the chart of Amazon, as you know, it was announced after the fact, of course, that Amazon is seeking to buy Whole Foods. Therefore, Amazon stock was up like 38 bucks on Friday, and Whole Foods stock, which we're going to look at later, was up 8 bucks. So as you can see here, we've been on a bullish trajectory. This yellow band here is bullish, hence a red one is bearish. So we have had locked in bullish momentum for quite some time here on this weekly chart on Amazon as it's marching toward $1,000 a share. But then something happened in that 2 weeks ago, the week of June the 9th, we had a sell-off after it hit $1,000 a share. It plummeted to $927. So that was a huge sell-off, only to find itself bouncing back up to $999 before closing at $987. So you thought you were going to get a downtrend channel or the beginning therein, and you still might, but that Whole Foods thing really helped. So maybe that's why it was announced now instead of back in somewhere. It was announced here. It's just funny that the stock was breaking to the downside, and then the announcement comes out and saves the day. Maybe. We'll have to wait and see. So this is where we ended up. All right, so the bullish momentum is still locked in despite this sell-off here. In addition to that, the market managed to close above its momentum line, which again also is bullish. So as it stands, this market is doing its best to stay alive. And right now it's looking alive. As long as it can stay above 971.75, this market is going to have some good momentum for this week, and that's exactly what it did here. All right, let's move on to our next chart. Got a couple of Bitcoin charts we're going to look at. All right, on this one here, this is the BITCF. All right, and yeah, it's a penny stock. It's trading higher. You know, it's more expensive than the other one we're going to look at, but as you can see, sell-off in the Bitcoin last week, and this corresponds with that after marching up. So the thing to note, though, is we still have bullish momentum overall within the trend. We lost intraday momentum because we closed below the momentum line. All right, and that's that blue line right here, closed below it. All right, so that's bearish. However, it's showing that we still are locked in on the bullish side in the long-term trend. So we have to see, is that going to manifest itself this week, or is something else going to happen where we give up this long-term momentum and have more of a major correction? There's so much going on in the Bitcoin space right now, and I don't want to get too far into it on anything beyond just the basic analysis in this video, because I'm working on a mini documentary on it, going into depth and explaining what's been going on with this Bitcoin. So suffice to say for now, this is where we find ourselves as of today. All right, this is where you are, and right now this market is basically in free fall. We're going to see how much more it corrects, but as it stands for today, key support is going to be around 29 cents. So we're going to see 0.2930 to be exact. Failure to maintain that today would open up the floodgates to the downside, and this thing could plummet back down into the single digits easily. Let's hope that's not the case. All right, moving on to the next Bitcoin situation. We're looking at this is the actual Bitcoin itself, so let's pull this up. All right, you can see where we've come and where we are. First of all, you see that long-term momentum is still locked in, and so is the short-term momentum. Both long and short-term are both bullish. And this bar here indicates that we're going to get some sort of a bounce. The only caveat would be if this market were to close below 2467.89 this week. If it does close below $2,467.89, it opens up the floodgate for much sharper correction. All right, and that's where we are. As of right now, the market is okay. Long-term momentum, short-term momentum are both bullish. All right, so that's where it is on the weekly chart. So far, it's trying to maintain. All right, if it loses that momentum this week, the next stop is right here, ladies and gentlemen, 1966.27. And again, key support is at 1758.91. All right, so that's where we are right now. It's at a crossroads. Either it's going to break out from here or it's going to come down and correct. We'll have to wait and see what takes place. All right, now this one's not acting right, so let's see here. Let's go to a daily chart on this one. Not helping. I have to work on this and see what's going on. I don't know why it's not acting right. Okay. All right, we'll go on to the next one. That chart's not acting right. All right, this is the BTSC. BTSC. All right. Now this one is moving a little bit different, as you can see here. It's moving a little different. Had a huge spike on this one 2 weeks ago, the week of June the 9th. Ran up to 20 cents. Corrected down to a low of 6 cents. Then last week we have a high of almost 10 cents. And then it comes down to take out last week's support and breaks lower into the 6 cent handle. All right, as you can see here. Now this one, the short-term momentum is bearish because it's lost it. Okay, it needed a close above 11,756 basically, and it didn't get that. All right, so as you can see, it's well below the blue momentum line here, the long-term line. And the longer term momentum is right here, and it's still bullish. So you get a longer term bullish momentum with a shorter term bearish momentum. This means that this market is somewhat confused at the moment, doesn't know how much lower it wants to break. But you remember what I told you about, there's an opening bell. Remember what I told you about these pointers? These pointers are key, all right? They are key. So at some point, the market's going to come back up here and test or take out this 20-cent high. So this was an interesting one to see how we do today, or should I say this week. All right, let's move on to good old dry ships. Dry ships, dry ships. Where have you been, right? And as you can see, the long-term chart is messed up because of the devastation in price that this market has had. See, taking all the splits and things out, this is $11,500 stock. All right, that's pretty high. All right, and actually higher than that. If you take away all the splits and all the weirdness, this would have been basically a $14 million stock. All right. Here's all the funny business going way back here. All right. Look at that. $50 million stock. $210 million stock. I know, it's crazy, isn't it? But that's basically where you find yourself with this one. So it's still flat as a doorknob. If we bring up the daily, kind of opens things up a little bit. If I can get it to come up. And it doesn't want to. All right. Suffice to say, dry ships ain't going nowhere no time soon. It's just one of those that we know it has potential to blast off and do what it wants to do. So we're just watching and wait. All right, here's Ethereum. Let's get into the Ethereum. Bear with me just a second here. All right, so here is the Ethereum. All right, as you can see on this particular weekly chart, the long-term momentum on this one is still bullish, and the short-term is too. Technically speaking, the Ethereum is outperforming the Bitcoin itself at this point. All right, Ethereum is outperforming the Bitcoin. And right now you're rampaging on your way back up to 400. So this is where it is now. You got the pointer, you got price action going toward the pointers like I told you before. Last one was here. Prices kept going. Here's the next one. Prices should continue to keep going. Had a pointer here, had a pointer here, and then here. So this one, upward trajectory is still intact. Only thing it needs is a close above 419, I'm sorry, 262.01, and it will be good to go moving forward. That's all it needs. All right, so moving right along, let's take a look at the miners. Let's see here. All right, as you can see, the market is well consolidated within the Kumo cloud of death. Well consolidated, right? Everyone see this. All right, this one's not going anywhere. It's just whipping along the Kumo cloud. This is a textbook example of price action within the Kumo cloud. It's called the Kumo cloud of death because of the whipsaw consolidation action. And the price action tends to trade at both the top and bottoms of the cloud, sometimes even spiking below the cloud. It can even close below the cloud, like right here, we closed twice below it, only to come back up and test toward the higher end of the range of the cloud. All right. So this is a perfect textbook example of price action within the Kumo cloud. And you can see that clearly right here. Market changes between being bullish to bearish to bullish to bearish. And that's how you do. Bull, bear, bear, Next one should be bull, but who knows? So it's not going anywhere. It's not ready to do anything. It's just consolidating at this point and flatlined for all intents and purposes. Nothing to even talk about on this one. GDXJ, pretty much the same story as your GDX that you just looked at, except for this one is weaker because it's taking place outside of the cloud. It's in the bottom of the cloud. All right. Only thing you have going on your side is you have pointers along the way. Yeah, this one here. You got this one here. This one here. And now these two back to back here. But that's it. I think the gold miners just need a story at this point or something. My long-term outlook is still the same for these, regardless of how long it takes. Just the fundamentals are just too great in this situation. And now we're just waiting for the technicals to lead the way. GLD is going to be under pressure because gold futures are under pressure even this morning. And you can see this is a downtrend channel. Now, short-term momentum is bearish. Longer-term momentum is still locked in on the bull side. So it is possible that all sell-offs could be bought. All right. The last example we had was back here. The sell-off was bought. The sell-off here was bought. Okay. So as you can see on this weekly time frame, the picture is clear. I like the weekly time frame, the weekly charts, better than looking at just daily charts. Daily charts tend to be too noisy. All right. So when you're doing your visual analysis, you're going to want to use the weekly charts. Daily charts are used for something else. Does anyone remember what daily charts are used for? Daily charts help you to get in and out of the market situations. The weekly chart helps you to analyze the market situation. All right. Daily chart helps you to time it. That's it. I do not use daily charts for analysis. I like to use the weekly chart. Daily chart, like I said, is for timing. All right. Even though you can try to use it for analysis as well, it's just better on the weekly chart because you get to see the big picture, you see the whole picture, you can see your price action, you can see everything you need to see. As far as Litecoin, I'm going to try to see if I can get that added this week as well. All right, so just bear with me. A lot of projects going on right now. So we'll see. We'll get it popping for you. We'll get it popping. All right, the Mighty Mygen, or Myriad, I should say. Mighty Myriad, MYGN. Is it no stopping the MYGN? Is it no stopping it? All right, let's break it down. You have the beginning. This is saying this is the beginning of the bull run in Mygen. The only problem is here we are now inside the Kumo cloud. You know how that goes, okay? This is where we are. You can't ignore that. You don't know how much deeper in the cloud it's going to go. Just suffice to say it is in the cloud. So you're going to watch your stops on this one, okay? Watch your stops. That's all I can tell you in the Mighty Mygen. But for all intents and purposes, things look good. Long-term momentum up, short-term momentum up. What more can you ask for? To see carryover deeper into the cloud, all you need is a close above $21.91. That's all you need. And it can definitely do that. Even be able to absorb somewhat of a pullback this week if necessary. Knick, knack, paddywhack. Here we go. All right, so price action above the Kumo cloud. The price ladder, the steps working perfectly. all right, to help catapult price. And now here we are. But you got a few things here on the knick-knack paddywhack. Knick-knack paddywhack is trying to resurrect itself. You saw the awesome sell-offs back here 4 weeks in a row. The awesomeness behind this, where you fell from $3.41 all the way down to $1.06. Then you rally back up to 242. Now here we are at 163. All right, so weekly momentum is at $1.72. Needs to close above 172. We didn't do that last week, so it needs to do it this week. And you have the possible beginning stages of a longer-term bearishness entering into the market. And so now the long-term and the short-term momentum readings are bearish. So NAC is going to have to show us a little something today on this one. Oops, hit the wrong key. All right, let's go to Nike. Someone asked me about Nike. Nike has been added to the list, so you should see that on the next sheet. Nike has been bearish. You can see the long-term momentum is bearish. Short-term momentum is also bearish. In order to put an end to the downtrend, Nike is going to need to close above $52.73 this week. Failure to do so will open up much more downside to come, as we are bearish. Long-term momentum here. The blue line, you probably can't really see it, but we're below it. And we're also breaking below the Kumo cloud here. All right, so this one has a lot to show and prove itself. All right, let's take a look at oil. Oil has been on a slippery slope slide. As you can see, long-term momentum is bearish, locked in. All right, here we go. Every rally being sold, basically. We've broken below the Kumo cloud. We've broken below this blue momentum line. And yet, so your short-term momentum is bearish. Your long-term momentum is bearish. And price action is bearish. You do have some support, though. You got some support. And your support is going to be just under $25, around $24.96. A break of $24.96 is going to open up much, much more downside. And this runs the danger of being a $15 stock before it's all said and done, if some bullishness don't get up in here quick. And that's ticker OIH. Moving right along to the Qs. The NASDAQ and the Dow are up in pre-market trading. And you can see here where the market is. It tried to come off, still looks really weak and needs to come back up. It lost the longer term momentum, all right, and it lost the weekly momentum. Where you have a inverted pyramid like you see here, all right, that means the reading is neither bullish nor bearish, all right. It's saying that it's neutral and possibly in the process of, turning over. In this case, you saw we were locked in bullish from back here, lost that bullish momentum, but then locked back in the following week. All right, right here we lost it. Are we going to lock back in this week? We need to see. The QQQ needs to close above 139.93 this week in order to put an end to the downtrend. Failure to do so will open up much more downside, and we could possibly see either a close or intraday spike below the 135.90. All right, 135.90. So this one we're going to be watching to see what happens today. Looking at SLV. SLV right now is, let's see. Yeah, it's pretty weak too. As you can see, it's in free fall right now, and momentum could be accelerating. But the longer term trend It's trying to build, there's some momentum building in here. You can't see it by looking at the chart. That's why I like the algorithmic charts. These algorithmic charts that you're looking at is what I've been working on for a while to bring back to you so you can be able to see them. And I figured out a way to do that so that you can see them, and now you can see them. Here they are. The algorithmic chart is showing you that there's something creeping in. There's some momentum in here regardless. So someone is buying here at these prices. Some type of accumulation is being picked up. All right, now it doesn't mean that prices can't head lower. You got that last thing here where the long-term momentum was still up, and then selling pressure came in, and then the bears took over, but someone managed to buy it up, prop it back up again. Now we're headed back down. Interesting price action, but right now SLV is weak, trading below the Kumo cloud, and we're mixed because we're below the short-term momentum. We need a close of $16.17 to put an end to the downtrend. All right, moving right along. Looking at our bond market, TLT. All right, still bullish, trying to get above that that Kumo cloud here. Okay, it's doing the best that it can. I need to pause right here for a second and show you, or not show you, but explain to you that the algo charts are vastly different than your price charts you're going to get in your basic charting package, because we're looking at the algorithms and what you can't see. So sometimes they coincide, but oftentimes they don't. So I just wanted to show you that. If you remember the last charts I was showing you, I think it was, where it showed you that this was either in the cloud or top side of the cloud. I can't remember. But anyway, on the algorithmic charts, they are not. And you need to see that and know that this is not what it appears to be on your standard charts. Okay, so bonds have been bearish for a while, but it looks like it's been building a base here, and we're getting ready to roll. All right, so 126.35 was the close, and I think that we will be able to reach into the Kumo cloud this week, as longer term momentum is bullish. Short term momentum is also bullish on the bonds. Nat gas has been very interesting, to say the least, because it's been trying. Ticker UNG has really been struggling per se to keep pace with the futures. It's like in some ways the UNG is spot on, but as far as being a reader of momentum, but in other ways I feel that it kind of doesn't keep pace. It's just a weird type of a thing. But at any rate, you can see it has get up and go in it. Back here in the week of November the 11th of 2016, we rallied from 685 all the way up to 952. So that was a good $3 run there. So it has this potential. The only thing is, though, I mean, it took, you know, basically 5 weeks to run $3. That's the only downside. You know, and it has relatively very low ranges, daily ranges. You're lucky if you can get $2 out of it. All right, so as you can see here, this is where we are, and these are weekly charts, by the way. All right, and I hope you are taking note. Let's go back. You see that gap that you had back here? Well, that gap was filled on an intra-week type of a basis, creating a spike. Right? We closed the gap, but we created a spike, a pointer. Prices has never gotten back. Price has never gotten back to that pointer. Price has never gotten back to that pointer. The pointer is at $17. Price has never gotten back to that pointer. Never, never, never. This is January of 2015. So January of 2015, we spiked, and here we are more than 2 years later. We're nowhere near there. At some point, it's going to need to be dealt with. This is a perfect example too, a good textbook example of how sometimes it can take a while for gaps and or spikes to be filled, to be tested, to be dealt with. It can take a while. All right. So you just never know, you know, how these things are going to play themselves out. All right. So I just wanted to throw that at you for a minute. This was a perfect example on ticker UNG, nat gas, to see how that works. All right. Here's Whole Foods. Finally, we get to Whole Foods. You see this massive spike. You got the beginning based on last week's trading because of that Amazon announcement, the beginning of a longer term momentum run here. All right, so you see a blue line way down here. All right, so Whole Foods, basically nobody was really checking for Whole Foods. You can see it was in a downtrend channel, it was trending down, and then all of a sudden it stopped. All right, stopped here. And then from there, you see a sharp spike down, and then a run up. This spike down is interesting. The spike down is very, very interesting. You got some spikes back here too, and they haven't been dealt with yet. I'm thinking when all is said and done, this thing is going to fall. This thing is going to fall when all is said and done. At some point, you have to contend with the pointers, ladies and gentlemen. All right, looking at Walmart. Walmart and other retailers were getting smoked last week because of the announcement of the Amazon deal. And you can see here it's been coming off. It lost the long-term momentum last week, and it also lost this intermediate, or I say short-term momentum. It needs to close above $76.83 to put a stop and an end to the slide. If not, it's going to continue to cascade, and we're probably going to get possibly inside the Kumo cloud. All right, all things being equal as far as Walmart is concerned. The mighty U.S. Steel. All right, kind of building a base here, trying to find the bottom. Yeah, it's outside the Kumo cloud to the downside. It's below the cloud. This is a possible top here and not a bottom. It's a possible top and not a bottom because it's taking place at the bottom of, on the outside of the Kumo cloud. All right, and you got heavy resistance right here where it's at. So with that being said, though, can't ignore the possible beginning of bullishness, longer term momentum. So all this stock needs to do is close about $20.66 this week, and it should be able to put it in to the sideways to slightly lower pricing and make a run back inside the Kumo cloud. All right, so this one right here is kind of flatlined until then. It's a wait and see kind of attitude. This is a very important one, XIV. Very, very important. Because as goes the XIV, there goes the rest of the stock market. All right? This is a broad generalization of the stock market. This pointer is nasty and must be dealt with. At some point, we will be topping and preparing for a possible correction. All right, this happened on the week of May 19th, 2017. Market has recovered since then. You saw there was a problem here. 2 weeks ago, there was another problem. Then the market manages to redeem itself, but not really, because we didn't take out this high or this high. All right, this was 80.64, and this one here is 80.61. So technically speaking, we have to now cancel out this longer term momentum and the shorter term momentum and replace them with the failed top. Market needs to close above 80.64 this week, or it's going to start breaking down. This is ticker XIV. All right, XIV. Watching that one with a passion. All right, let's look at ticker XLF. Financial sector. Here's your financial sector. You can see the beginning stages of some bullish momentum. You got your short-term momentum already bullish and locked in. The XLF just needs to stay above 23.74 on a close this week, and this one can make a good run back at toward the old highs here of 25.29. So that's where we are with the Z-Bank of America. All right, and that's all I got for today, ladies and gentlemen. That's our snapshot here. This is our pre-market Pulsescan mixed with some end of day tossed in with a few other things. But this is what we're seeing. All right, so now I know your next question is going to be, well, what about dem pulse waves? Let's take a look-see, shall we? Let's see if I can get it to come up. Doesn't want to. Okay, here we go. All right, so we go over to my house over here at the end play. Let's look at what kind of rallies we got. You can see we got quite a few of them here. All right, quite a few of these. And we're going to stop recording right here. All right, that's all we got for today. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Do yourself a favor, come on over to postwavetrading.com and learn how to trade these markets. Peace.